Information presented on Sky News Real Estate is general in nature. Viewers should seek their own professional advice before purchasing products or services. Sky News Real Estate may receive a fee for commercial arrangements with companies featured in this programming. Sky News Real Estate. Smart Investing.
Hello and welcome to Smart Investing. I'm Chris Gray. On tonight's show, financing a commercial property, what are the banks looking for and what can you do to make your finance application successful? Property development finance, what's involved and how should you approach the lenders? And home loans for the self-employed, are they really that much more difficult and what are the insider secrets? Well, joining us on the show tonight is John Mansamelli from Hunterwood Solutions, mortgage brokers and advisors, and Charles Tarby, chairman and owner of Century 21 Australasia. It's Monday, I've just flown in and I'm just learning English. I've been speaking Mandarin for the last few days.
There you are.
Even though I can't speak it.
Welcome back.
John, let's talk about interest rates, and I know you've got some of your basic variable rates. We'll try and get them on the screen, but if not, just take us through some of those numbers.
Yeah, so interesting times that we're living in. We're looking at interest rates. If you've got, again, the banks are rewarding you if you've got a 20% deposit. So if you can keep your LVR, your loan-to-value ratio below 80%, you're looking at 3.6 to 3.67%, call it 3.7%. If you've got a 10% deposit and you've done well and you've got, you want to borrow 90%, then it's slightly higher rate, anywhere between 3.7 to 3.8%. So what's interesting, though, to note, guys, is that the funding pressures at the moment, bank bill swap rates and domestic foreign sources of buying money is going up. So what we're suggesting to clients is maybe time to consider fixing some of the loans, because we are noticing that there is some rates starting to creep up. So a suggestion is, if you are worried about rates going up, and remember, banks can do an out of rate cycle hike, and they have been doing that, it might be time to consider fixing part of your loan.
Do you think they might do it, though?
Graphic up there as well,
there
which
we
is
go.
great.
Do you think they might do it, though? I mean, we're now coming up the end of August, so you've got the festive season approaching, and they generally don't like to do anything.
Do the banks care about festiveness?
Yeah, I don't know. It's all about profits.
Are you trying to say they've got a heart, Charles?
Festiveness.
Shush. Yeah. Settle down, guys. There you go. Basic variable, guys, 80%, 3.6 to 3.67. What you will notice is some of those lenders there, AFM, Home Loan Avenue, the great lenders, maybe not have heard of them, but fantastic lenders. I think the thing you should point out is the serviceability. Some of those lenders may not lend you as much as you would like. So just bear that in mind. And at 90% there, you can see that there's some really good lenders as well.
And valuations are still going to be an issue, because even if a contract price is where normally a valuer will come in at, and they can justify that. But I think some valuers are getting a little bit gun shy as well because of the way the market's changing. So a 10% may mean you need probably 12 or 13% subject to valuation.
Yeah.
Especially if the banks aren't being that festive and they're saying...
They're not as festiveness.
Technically, they never put pressure on the valuers, but other people believe that they do.
Yes, yes.
Let's run through some of those fixed rates.
Yeah, so as mentioned, we're recommending to clients to start thinking about fixing some of their rates, only because some of the variable rates are going up. So you can see on TV here, 1 to 5 year rates. Again, if you've got a 20% deposit and you're borrowing 80% and you're doing a principal interest loan, you can get as low as 3.98 for 5 years. I mean, that's just unheard of.
Yeah. When you're saying fixing, though, you're saying fixing all of their loan or fixing part of the variable?
Just part.
Okay.
Yeah, just part. So the idea is to have that flexibility on the variable portion that allows you to have the offset account and be able to pay off as much as you want. Now, for those of you who want an interest-only loan, you can see the differences there as well. For us investors, and that's still pretty good. 5 years fixed, Chris and Charles.
Yeah.
3.99%.
Yeah.
And so, Charles, for some people, there's a lot of media now saying that people are being forced onto principal and interest, which is going to increase their repayments. But one little bonus is, based on John's figures, at least you can maybe get a cheaper interest rate if you are going P&I.
Yeah, you can. And that was the big push going back over a year ago from the Reserve Bank. There was a lot of talk then about people coming out of fixed loans and finding themselves not having reduced their debt and finding that the market's gone backwards. Well, one of those things has happened. The market's gone backwards in most parts of the country. And so they were concerned that if you get situations that happened in Perth where there was negative equity, people can't borrow any money on their property. And if the interest rates, when they came out, they were 4 and they went up to 5, or 3 and they went up to 5, the repayments are significantly different. And there's no compensation or allowance for those people.
Yeah. Now, sure, it is risky borrowing more amounts of money, and we'll pull up your 95% stats. But again, if someone's young, they've got no other debts, and they've got a good savings history, they've got a good income, there's no reason why they shouldn't be borrowing 95%.
I wanted to bring this up, Chris, because everyone, it's all doom and gloom around finance at the moment, but there are still 95% loans here. I remember earlier this year punching the air going, yay, 95% loans are back. Everyone forgot about that. But, you know, if you're a young first homeowner and you're an investor, there you go. You're looking at a couple of lenders there, great lenders who are there to help you get started. Now, what I will say again is those lenders traditionally don't allow you to borrow as much, but, you know, there they are. There's the products at 95%.
If there's a will, there's a way, Charles, and surely there's some opportunity around Australia where there's potential growing markets.
Lots of growing markets. Some of them are just...
Can you just repeat that? Lots of growing markets.
Lots of growing markets, because some of them hit really rock bottom in certain parts of the country. I mean, really rock bottom. And so those ones are now opportunistic for those investors out there. Even going to the Adelaide market, again, it's sort of had really steady growth. It hasn't had that crazy growth. So it's always been a little bit below the line. And so as the markets come back, it still has an opportunity to climb up. And that's evidenced by clearance rates in that capital city, clearance rates in Canberra. We're watching clearance rates climb in places like Brisbane, where traditionally auction is not done by most agents. So there are areas of growth, but there's still areas of decline.
So if people are trying to find these growth areas, do you think the auction clearance rates is still a good determinant or a good first sign that something positive is happening there?
I think we've talked about this before. The first sign is agents' windows. Look in agents' windows. Have a look at properties. If they're sitting there week after week after week, you know there's a chance to make an offer. If there's sold stickers everywhere, whatever's left in the window is going to go very quickly. They're really basic ways of looking at it, but people love looking in real estate agents' windows. And I think that's the way of doing it. Or getting online and getting the systems that search automatically for you. But nothing beats a cup of coffee and standing in front of a real estate agent's window.
Exactly, old school. John, there's a lot of misunderstanding about trying to get loans for self-employed. What's the real truth?
Yeah, I don't understand where this has all come from. I think it's because accountants have done such a great job in trying to reduce our taxable income, and everyone thinks for some reason that, you know, it's just harder to get a loan. It is a little bit, but, you know, provided you've got your financials in place, then it's reasonably straightforward. It shouldn't be any harder than a PAYG. But like I said, if you've got a great accountant who's reduced your taxable income, it may not help with your borrowing capacity. But there are some tricks around that anyway.
And again, I think we've talked about it before, is a lot of people pick the agent on who's the cheapest agent, the tax man or the tax accountant on what's their cheapest rate or who gives the biggest refund. But a lot of it these days is more who gives the total package. Sure, minimise my tax, but at the same time give me enough income so I can actually service and I can actually go and make some money.
Yeah, it's a double-edged sword when people try to sell businesses and they're sort of, in the old days, cash businesses, and they want to sell their business. They pick up a bit of cash, but they lose a tremendous amount in asset value because they can't justify it.
Yeah.
So there is an issue in that, but I see it quite a lot.
I think a tip, though, is if you find a good banker or broker, preferably, who understands financials, a broker can look at the financials and say, I can see what your accountant's trying to do, and present the story to the bank.
Now, there's something called ad-backs. Can you explain that to the viewers?
So ad-backs are a tool that a broker or a banker can use to lift your income. So an example of that would be depreciation on a motor vehicle or a one-off interest payment. So we know a motor vehicle may have reduced in value by $10,000. That's an example of an ad-back. So if you declared a taxable income of $80,000, we can now make it $90,000 by showing that you've
So realistically, if you had an in-law living with you and they were paying a modest rent,
you could use that as well. Yeah, you could definitely use that. And ad-back
probably have to have a signed lease or some sort of agreement in place to make it.
And rather than a modest rent, you could have a good incentive to say,
Is it your
I can't,
mother-in-law, though?
No, come on.
No,
I can't
let's not
service
get
on a
extreme.
modest rent, but if I charge you a market rent like you would be paying anywhere else, now I could get a mortgage.
That's right. Could be someone in your family you don't like. So there'd be quite a few people to choose from. Quite a few people to choose from.
Now, I used to have a banker many years ago, I'm not sure if he's still around. He used a wonderful term when he was talking to credit called discretionary income, or discretionary expenses, is that you don't necessarily have to drive that certain type of car or go on that certain type of holiday, but if you've got the cash in the bank, then you could spend that extra. Are they open to those kind of conversations these days, or are they saying, no, that's your standard of living,
At this time,
you're never going to go down?
Now, with the way the banks are, I don't know what they're doing, because they're making it up as they go through. They're like, this week, it's this week.
Get him started after I leave, will you?
On the Royal Commission. We'll get on to the Royal Commission later on.
My favourite topic, the Royal
Well,
Commission.
just before we jump to Charles's numbers, any final tips for the self-employed?
Find a broker who understands how to pull apart a financial statement and assets and liabilities, because then they're going to be able to say, yep, your actual income is 120, even though you paid tax on 60,000.
Wonderful. Sounds good. Charles, take us away with the numbers, the auction clearance rates.
Down, down, down. What's it? So what's the store that's got down? 56.9%. So it's dropping again. It's been 56.7%. It's been interesting watching. It was 69.8% this time last year, Chris. So that's a really big difference between the two, and I can see that change or that trend sort of continuing. But there are pockets that are performing or outperforming others, especially in some parts of the capital cities where there's limited stock. They're still getting clearance rates of 75–80%. But overall, that's what they are. Sydney's overall clearance rate was 56.5%, and they had 572 auctions. And so the auction numbers are down as well. So it's not that the listing numbers are down, it's just that agents are not putting properties up to auction as frequently as they did, because they're not selling the same way they did. Melbourne had an even lower clearance rate than Sydney, and it came at 55, just over 55%, with 868 auctions. So it's been interesting to watch. But there are two real stars in all this. You had three capital cities overall that did better than this time last year. You had Perth, star, 60% clearance rate. Brisbane, 60% clearance rate with 103 auctions. That's a good number. And Adelaide, 68.1%. And that's been a star for some time. So these are areas we talked about right at the start of the show that have been belted a fair bit. And they're starting to perform a little bit better. So there's the upside in some of those areas.
Something to watch. Moving on to homes advertised for sale.
Yeah, they increased again, only slightly, 0.32%. But if we look at homes advertised for sale since this time last year, that's come in at 8.35%. So that's been climbing every week. So we're getting more and more, but not in some specific areas, as I mentioned. And that's generally in the upmarket area. When those listings start to flow in, that's when I think most of the market will have a bigger correction in terms of pricing.
Wonderful. And moving on to rent price movements.
Yeah, they climbed, and what I mean by climbed, they've been in negative territory for the last few weeks, trending downwards. They've just levelled out again. But the two worst performing capital cities are actually Sydney and Darwin. Sydney has been going negative for a while in rent values. Darwin has been up and down for a while, but it's had another hit in this last week's figures compared to the week before. And the two rising stars, here we go again, Melbourne, but Adelaide was a rising star. So the rents in Adelaide have continued to increase. Clearance rates have continued to increase. So there's something in that. You know, if you look at those numbers each and every week, there's something in those marketplaces. Wonderful. And finally, the vacancy rates. Pretty good. This week, Melbourne was back in the 0 point figures, 0.74% vacancy rate. Sydney climbed slightly, only 2.44% up from 2.33 last week. But Perth's doing okay, still climbing a bit. I think it was 8.03 from memory last week, but 8.54% this week. And the combined three capital cities had a vacancy rate of 3.91%. Wonderful. And look, as we always talk about, is you can read either way into these figures. So even if you're getting a 0% growth, there's some that might be going up at 5 and some going down at 5. So again, is get out to see your real estate agent, go and see the properties, because that's where you're actually going to see what's happening on the street. Yeah, absolutely, Chris. Yeah. And John, you're a big fan of that, because I know you don't just invest in one state, you go a lot of interstate. Do you want to maybe tell the viewers, like when you go to Brisbane, what do you physically do when you go there?
I walk into local agents and see, pretend I'm going to be renting, and I will see how much stock is there. And then I'll just say, look, I'm looking to do a transfer here. what have you got? And I'm very specific with the type of property. And if they bring out the caviar and the champagne, all sorts of stuff, I know there's too many properties. If, on the other hand, they put down, so put your name down on the list, then I know there's not enough properties, all right? And then I go to the cafe, because you know me, I love cafes. I go to cafes and I say, hey boys, how you going? And what's happening in the area? Get me a feel for the area. So all those local small businesses will always give you a really good pulse for the area.
So you've seen him in other states, I've just seen him in another one.
See, it's great. This is the way to get free champagne and caviar from the agents. And then a free lunch down at the local cafe.
I can see his I'm going to actually broadcast his picture out to all the offices.
So Charles, if you want to know how to sell real estate, come and see me.
Thank you.
All right, good to see you, Charles. Thanks for joining us. Well, coming up, more advice from the experts on the benefits of investing in commercial property. We're going to take a short break. We'll be back soon.
You're watching Sky News Real Estate. Smart investing.